Okay, so we're looking at how to account for trademarks. As I said, trademark, the Nike swoosh symbol, the McDonald's golden arches, Amazon has the smile, right? So you'll look at the symbol and identifies with your business. You can renew your trademark every 10 years. And so if you don't plan on renewing it, then you would amortize it because then it would have a definite useful life. If you plan on renewing it, right, like the Nike swoosh, the McDonald's arches, they've had that for decades, right? They don't plan on letting that go. So what they do then, they would then test it for impairment. If the value of the trademark goes down, they would record a loss. So every year they would need to value trademark, okay, and then record a loss if necessary. And then another intangible asset that's pretty common, especially for large corporations who acquire other corporations, is goodwill. And so if you buy a company and the price you pay for the company is more than the fair value of the assets added up, the difference between the fair value of the assets and what you're paying for the company is called goodwill, right? And the reason why you're willing to pay more than what the fair value of the assets is that you're buying an established business and it already has a reputation, it has a customer base, it's known. And so those are the things that you are acquiring. That's why you're willing to pay more for the established business than you would if you bought all of its assets individually. So you will record an intangible asset called goodwill for the difference between the purchase price and the assets that you've acquired. And this would also be tested for impairment. So we wouldn't amortize it because hopefully you will keep the business going and you won't lose that value. Okay? But if you did do the testing, again, there's accounting standards that tell you how to value the goodwill. And if you see that it has declined, you would record a loss from impairment. So again, I've already gone over, and this is also in the textbook. This is the balance sheet presentation for our property, plants, and equipment. And then your intangible assets here, they have the intangible asset patent that's being shown at its book value. Under our international reporting standards, they show things a little bit differently. They record at fair value as opposed to cost. So that is a big difference actually between the US GAAP and the international standards. Okay. And they call their balance sheet the statement of financial position.